Disney had their earnings call this morning, and it looks like a complete disaster for the mouse. We're going to go over the entire thing as summarized by our good friend WDW Pro. Great YouTube channel, by the way, over there. And look at what this means for the company going forward. This is a interesting day, and the stock does not look good for Disney after the earnings call either. Bob Iger really has screwed up this company on so many levels, and I'm hearing this is just the beginning of the stock drop. But I'm not a financial advisor, so don't listen to me. But I just do this for entertainment purposes as a fan of Star Wars, Marvel Comics, and the like. My name's John Delarose, everybody, so please hit the like and subscribe button. Join us here on the channel, and I create my own comics myself. If you're looking for a great alternative to Disney, this is the Hidden Emperor graphic novel. It is a wonderful replacement for Star Wars. Action, adventure, fun, beautiful things to look at. All of the above for you. Please support our channel and support this right here. Grab the Hidden Emperor or grab the complete Ayla Rin Adventures on here. If you've not read my books before, you'll really love this. We're super proud of this and very, very happy. We've got a wonderful, tremendous success so far, and it's all because of you. Thank you again. And yeah, that's in the description below. All right, so Disney's earnings call went live today, and WWW Pro talked about this. The third fiscal quarter earnings call is live, and he has live updates as he talks about this. And so if you look at the earnings call happened this morning, stock dropped by about 3.6%. They were not thrilled by whatever happened here. Investors were like, we don't like what this is going forward. And if you just look at a chart of where we're at all time here, the pandemic weird hit happened, was about its lowest at $85 a share. Got down to 87, so it's getting close, or getting really close. 79 was its lowest after the Marvels debacle and things like that at the end of last year. We're getting really close to its drop, and I was watching Jonas Campbell from That Park Place and the like speculate that the shares, he thinks it's going to go down to $75 a share again. Disney's really just screwed the pooch on so many levels over the last year. I mean, we've got their streaming content. We talk about how Disney Plus really is not doing all as well as they thought it would. They're working on combining things with Hulu and the like just because the content's really not there. Star Wars The Acolyte, which was their $180 million gamble, just flopped horribly. Of course, the MCU shows really did not do very well either. Not a lot of hype for the current MCU stuff going forward with the Black Captain America coming out, the Agatha All Along show. I don't even know anybody who's planning on watching that. I don't even know if I'm going to review it because I just don't think anybody cares. It's very, very bizarre diversity themed things that were coming out. Now, the only bright spot for Disney really last year was Inside Out 2, or actually earlier this year, which actually surpassed what they thought it was going to do. It did very well, and it's like the one movie that didn't bomb for them over the last year or so. Now, the parks are a big part of Disney revenue, of course, and you'll learn here that park demand is down. There's been problems, of course, with all these new rides breaking down that they're replacing things like Splash Mountain because it was racist with a new Tiana's Bayou Adventure. And it's had massive problems, safety concerns because of what was exposed of DEI hires there. They're, of course, putting transgender princesses in the parks, crazy things like this that families just aren't liking. I mean, why would you go spend, $300 a person or whatever and take your kids to this weird grooming factory at this juncture? So it began at 8:38, 4 a.m. Eastern Time. Iger asked about theme park lower demand immediately projected for the quarters in the future. Disney projects flat demand for global Disney parks and experiences and claims entertainment will offset Disney's biggest revenue profit driver. So they're not expecting the parks to go well. That's if they're saying they predict flat, that means they predict, honestly, it means they're predicting way less. TWDC hopes for greater advertising potential on ESPN to compensate for an NBA deal. It will not be profitable in the first years. And this is where the streaming really is a thing. As much as Star Wars and things like that matter to a lot of us in our community here, the sports streaming is where the money's at. So they're overpaying for things, for long-term deals on that kind of thing in hopes that it will be profitable in the future, even though it's not now. Streaming success is being driven by creativity, Industry awards are his examples. Yawn on that level. That's a cope right there. Iger confirms channels coming for Disney Plus, maybe the first time referencing plural channels beyond ABC News already declared official by the company. He says they're bullish on global streaming value. I disagree with that just based on what I've seen a long time. And he continues to refer to industry awards as an industry is oftenly influenced by Disney, avoids financial defensive entertainment, and this is all cope. So if you think about what Bob Iger is saying here, he's saying, it doesn't matter what the streaming numbers are or the revenue is. We're winning awards. I've seen that before. That happens in the comic industry. It happens in science fiction publishing. Never a good sign because these awards are all just industry insiders giving themselves backpats. They don't actually mean anything. He says there's no strategic new partners for ESPN. That's a big one right there. And back to this, he refuses to discuss attendance at Disney parks. He says lower-income guests feel stress. High-income guests are choosing to travel internationally instead. That's not good. So you lose all the demographics on that level if that's the point. And I think a lot of middle America is just saying, you know what, we're done with woke Disney. We're done overpaying for this crap too. It just doesn't make any sense. I saw a video about just the cost of going to Disney World, and you can go on a French Riviera vacation for cheaper. It's insane. So that's crazy. CFO Johnson does not say domestic park attendance will rebound, claims international may because of the Olympics. That's the Paris one. No explanation of how the World Olympics hurts attendance. Disney says ad revenues have increased by 8%. Yeah, it's been up a little bit over the year in general for most of us there. Ads on DTC increased by 20%. So that's a little bright spot for them, but it's not enough to offset things. Again, the parks are the biggest revenue. The big movie-going audiences are the biggest revenue. Disney Plus subscriptions are the biggest revenue. Advertising is nice, but that's a small component of what they're doing. They're saying they will not license core IP for entertainment. They're going to try to keep it all in-house. That's pretty standard. And Disney provides no flavor statements regarding the release for the day, completely avoids normal structure of TWDC earnings calls. This is kind of wild. So it sounds like this was something that they were just shooting themselves in the foot. And WW Pro talks about the parks and why it's such an important thing. He says the revenue streams for the company, the fiscal year 2022, it generated approximately $28.7 billion revenue, about 35% of Disney's total revenue. It's a big deal. Profitability is equally noteworthy. The segment's operating income often surpasses that of other divisions thanks to high margins driven by ticket sales, merchandise, food and beverage. In 2022, again, that was $7.4 billion. Pretty big after the pandemic recovery. So this is a huge deal. If their parks are down and it's a problem, you're going to see massive problems. That's 35% of their revenue. Their movies are not hitting. The Marvel movies are not going to hit until the Robert Downey Jr. thing happens in a couple years from now. We're going to have just Black Captain America. What other movies are coming out? I don't even know anymore beyond that. But nobody's excited for that. I can tell you that right now. It's a big train wreck waiting to happen. We've got like the Rey future film for Star Wars in development, despite the fact that everybody's sick of the MCU stuff. We've got Andor dropping a season 2 that, as much as I like Andor as a show, but nobody liked it. Nobody watched it. So I'm in the minority on that. It's just not a good move there. And all the Mandalorian stuff's kind of still up in the air, and people have kind of just tuned out of Star Wars and Marvel overall. So they're big brands they gambled billions and billions of dollars on are just not performing for Disney. And with the parks going lower, it looks like Disney's in a huge amount of trouble right now. Now, we'll be monitoring, of course, and seeing what's happening with all the shareholder stuff. Not good. A big drop, as we showed today, about 3%, 3.2%. And when you're just looking at the trends for things, Disney's not going in the right direction. This is a downward slope. They almost recovered in 2021, 2022, which is when Disney Plus kind of got off the ground, and people were expecting that to be a big Netflix killer and compete with them. It didn't happen. Disney Plus, it was a disaster, and they are scrambling, and that's exactly why you have an earnings call that's weird like this, that you see Bob Iger just talking in circles, just not really having the normal structure of an earnings call. And, of course, making investors very, very scared for the future. Leave a comment down below with what you think about this. Hit the like and subscribe button. Make sure to check out the Hidden Emperor graphic novel. Hey, just got a backer. Thank you guys so much for supporting our artistic efforts. We are the alternative to Disney, and building here, we can only go in upwards. So thank you so much again. We'll be back soon.